Afternoon, ladies and gentlemen, and welcome back to another video. And as always, if you are new to the channel, a sub would be appreciated, as I do provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know in the comments below exactly what it is that you would like for me to cover in my next video. Today we had a question from Mr. Kocho M there yesterday to do a breakdown on Gbp Jpy as well as US30 for the upcoming week. So I've already uploaded the video yesterday when I saw the message, so I thought I'm just gonna do the breakdown today and just give you guys an indication of what the situation is on the US30. There is no fundamental data available yet, because why? The data is only, well, most of the data is only starting to be released from tomorrow. So we've got some AUD, CAT, USD. So the basic data that does drive the US30 is the PMI data. So I'll give you guys a full breakdown from a from a technical as well as order flow perspective, and then we're gonna do Gbp Jpy as well, because that was requested from Mr. Quatso M. Also USD CAT, but I've covered USD CAT yesterday. So if you follow the market breakdown for yesterday, you'll see that most of the pairs that I've done a breakdown for, I had gone exactly as planned. So this was the analysis that I sent out yesterday for the US dollar. This was the analysis that I did for USD JPY. Still hasn't started to move there. This was the analysis for Euro USD. This was the analysis for Gbp Jpy, Gbp USD. This was the analysis for USD CAT. This was the analysis for gold. This was the analysis on the Nasdaq 100. We can see we got the breakout that we're looking for. We're just waiting for that pullback. So everything has gone as anticipated. So if you have not watched the weekly breakdown, it was the video that I've completed yesterday. So go and have a look there. There's some very good content in there that you can use also to your ability. So without any further ado, ladies and gentlemen, let's jump straight into it. Now, on the US30, starting on the monthly time frame, what do we see? Now, the first thing that we can see is the market had tested very strong level of support, and the market had rejected that level quite aggressively. Now, I've spoken about US30 and said that we could expect the market to go and complete that information. However, the monthly candle had not closed at that structure in order for us to get the pullback. However, the market had broken above that area, and today is the last day of the month, so we can definitely expect some more continuation to the upside, potentially creating this head and shoulders pattern before the continuation to the downside there as well. Now, looking at the weekly time frame, what can we see? Now, from a weekly perspective, it's very clear over here. So the market had printed this information. After an information, you expect a pullback to the neckline before the continuation as well. Now you can see how the market had printed this equal low, because this week, like I said before, the week has to be taken into consideration, as this is an indication of a price that the market had gone and visited once, so we cannot ignore that week there as well. So we can definitely expect a pullback to that level. We also have this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci there from the high to the low of the impulse. And because the market had already started printing a green candle, we can definitely expect the market to go and hit that level over there before we could potentially see the market continue to the downside or continuing higher. Now, from a daily perspective, what can we see? Now, from a daily time frame, we can see how the market had just recently broken above all of this excuse me, level of resistance. Now, I spoke about this market when the market was stuck within this consolidation, and I said depending on which way we break out, we can then definitely look for some buying opportunities or selling opportunities depending on which way the market is moving. Now, the best way to approach the situation from here is firstly identify where the impulse had started. So we're going to take our Fibonacci there from the low to the high, and what we can expect this market to do is pull up slightly, go and hit that level, continue back lower, and then continue higher there as well. Now we can see the market had printed this structural level in the market over here, so we can definitely expect the market to go and hit that level first. This level over here acted as a level of support got broken, and all of that support's now once again turned resistance in the market there as well. So we can definitely expect the market to test that level, pull back, then continue higher to go and hit that minus 61.8 Fibonacci as identified from a weekly perspective. Now, if we go and look at the order flow data, so the commitment of traders, what the big banks, hedge funds, and institutions are doing in the market, we can see here based off the last week's report, hedge funds came in and they added 1,305 long positions. They also added another 1,238 short positions. Now, if we go and look at it from a technical perspective, we could obviously see last week how the market had taken this tank to the downside. We had this long liquidity spike where the market literally went and go and stopped out everyone that had buying opportunities, well, that had buys around this price, because you know people that buys at support over there, support over there. So the market actually just went for a stop hunt and go and hunt all that stop losses over there, grab the liquidity, and now we can see the market starting to move to the upside. So they added the short positions to actually just go and grab that liquidity at the bottom, and then they also added the buying positions, so we can see how the market is starting to move to the upside. Now, next in line, we've got Gbp Jpy. Now, starting on the monthly time frame, firstly, if we look left, we can see how the market is testing this very strong level of resistance. The market had printed this level over here, acted as support. Support got broken. The market tested this level again as resistance multiple times. However, there's one thing that we need to take into consideration is how the market had been stuck within this consolidation phase over here. The market entered this consolidation phase on the 1st of April, and the market has just been bound within that range for quite a couple of months now. So when trading a consolidation, we can definitely expect the market to pull back, and before we actually get the breakout that we would like to see. And I think the only time we might see the breakout is we've got some very high impact news for the GBP. We also got the official bank rate that's coming out, where it is expected for the Bank of England to raise the interest rates by 0.25 basis points as well. So with that news coming out, we could potentially see the breakout. If they do not hike the interest rates, then it's unfortunate for us to see a pullback and a continuation to the downside as well. So that's something that you can monitor from your side also. Now, here from a weekly perspective, firstly, we can see over here how the market had printed this W formation, came back, tested it at the neckline, and we can see how the market is starting to make its way to the upside. Now, if you drop down on the daily time frame, what do we see? Now, from a daily time frame, we can see how the daily and the weekly is contradicting with one another, because we can see here from a daily perspective how the market had broken below this level of support, and support got broken, and it's now testing that level again as resistance. Now, the only problem that we are sitting with here at the moment is the market had also printed this structure over here. Now, this is a very important structure. This level over here acted as a level of resistance once, twice, thrice in the market. So there's only two ways to go about this. The best way to wait is to wait for the market to either break above that level on the retest, start looking for buying opportunities for the market to go and hit that to hit that level of resistance as we identified, because the market is ranging. Alternatively, if the market breaks below this level, then we can see the market continue lower. But one thing I can almost guarantee you is that you will probably see this market just consolidate until the data becomes available. So this is probably what we're going to see. The market will probably consolidate, and then once the data becomes available, then most definitely the market will probably start moving. Now, if you look at the COT data, so the commitment of traders, so what the big banks and the hedge funds are doing in the market. First, looking at the report here on the GBP, we can see how hedge funds came in and they closed minus 3,094 of their long positions, and they also added 4,422 sell positions. The overall net positions went from minus 247 to minus 7,736. So if we go back on the report over here, so firstly, we can most definitely expect it from a monthly perspective, because excuse me, because we know that the market is testing a level of resistance. So there's definitely a pullback for the market to come back and test that lows, then to go up and test that highs. So we could potentially see something like that happen in the market going forward there as well. Because if you look at the for the previous day, you can see how they added over 9,000 longs and they closed 19,000 shorts. So they're basically just trading within the range until the bigger speculators come and start with that stop hunt. Now we can see here for this week, for the Japanese yen, the markets, the hedge funds came in and they added 7,864 longs, and they also closed minus 4,742 shorts. Their overall net positions also decreased from 80,000 to 68. That's actually an increase because the negative positions is decreasing on its way to a positive net position count over there. So we can definitely expect the JPY to get stronger in the short term. So that is exactly why we can expect the market to continue lower, to go and test that level of support over there. So the best way to approach the situation, as we know, this is a very strong level of resistance acted there a couple of times. So the best way to approach the situation is wait for the market to break below this level. Then on the retest, you can then start looking for selling opportunities for the market then to complete that impulse correction, impulse pattern. The market would have then also printed this head and shoulders pattern. This would have also been a level of support that got broken that would then be turned resistance. So that would give you enough indication or enough confidence in your favor in order for us to see that move to the downside from a technical and order flow perspective. However, one thing we do need to keep in mind is just make sure that you watch out for the interest rate, but that's only happening on Thursday, so we could probably expect this move to the downside for the market to go and test some lows there at the bottom. And if the news is positive, then by all means it's gonna go up. If it's negative, then we can expect it to continue to the downside. Now if you look at the sentiment data, so the sentiment data is what the retail traders are doing in the market, and if you look here, over 65% of retail traders had started selling the market and 35% of them are buying the market. Now I say you always want to be on the opposite side of what most retail traders are doing. However, in this case I'm gonna have to agree with what these guys are doing, because if you're a price action trader, you'd probably also buy the market, sell the market at that price, and then buy the market at this price here as well, which is a similar situation that we saw on the Nasdaq 100 take place for a couple of days. The market had been stuck within that consolidation, and like I said, if you followed the how to trade the Nasdaq video that I've made, you'd have seen this is exactly what the Nasdaq did. The Nasdaq consolidated, had broken out, came back for the retest, and we can see how the market is starting to continue to the upside there as well. But that's another video that you can go and watch. So that's the kind of situation that we got on Gbp Jpy as well as the US30 from a technical sentiment and order flow perspective. Now that's all for today, and then as always, if you enjoy the video, just smash the like button. And I want to say thank you to all my loyal viewers and subscribers. I really appreciate it. You guys are really helping the channel grow as well, spreading the word out there. And that's all from my side, guys. And as always, cheers for yes.